Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, the beauty of mathematics, part 13. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go for 500,000 subscribers. Now, we do this series on the first of every month. So now we are looking at part 13 in our series. To give an update on where we are today, the total cryptocurrency market capitalization is coming in at a very modest 1.44 trillion. Now, I should say that while the title of the video is Bitcoin, this is actually the entire asset class's market capitalization. So again, the total cryptocurrency market capitalization today on July 1st of 2021 is coming in at a very modest $1.44 trillion. The fair value logarithmic regression fit to the total cryptocurrency market capitalization, which again is a monotonically increasing function, is coming in at a more humble 748 billion. This represents approximately an overvaluation of 93% based on this model. Okay? Now, what does that mean? Well, first of all, we know that Bitcoin can stay overvalued for years at a time. It can stay undervalued for years at a time. And when I say Bitcoin, I should say, again, the entire asset class, not just Bitcoin. We've seen long periods of overvaluation, long periods of undervaluation, and then sometimes where we just sort of flirt with our fair value regression line for a while. And what we've discussed at length is that it seems like we have hit an intermediate peak in the market cycle. Now, one thing we should say again is that no cycle will be similar to the one before it. There can be similarities, I would agree, and we've been drawing the similarities between this cycle and the 2013 cycle for over half a year now. We've been discussing the similarities between the 2013 cycle and this cycle. But I should also say that while a lot of people may take that to mean that we are going to have a major blow-off peak at the end of the year, there's also some evidence to suggest that it could take longer than that. I know I've mentioned this concept many times on the channel, but there is a lot of evidence to suggest that. And again, the reasoning is because if you look at other milestones, say between 2013 and then this current cycle, it's been stretched out. Okay, it's been significantly stretched out. And so the idea that from the first peak to the second peak would be the same amount of time is somewhat unlikely, in my opinion, given the fact that everything else has been stretched out. So again, every market cycle will be remembered in a different manner. There's a possibility that this cycle could be a triple peak cycle, and maybe we have another peak in, let's say, Q2 of 2022, and then we have another one in Q3 of 2023, right? There's all sorts of possibilities, and I think we need to remain open-minded as to where things could ultimately go, even if it does mean a peak in 2021, which again, I do highly doubt, okay? Now, if we continue looking at this chart, we will recognize that there are key periods of accumulation, and accumulation, or I should say, primary accumulation occurs when we're below the fair value regression trend line. Now, does that mean it's not smart, or does that mean it's not smart to accumulate crypto when we're above it? Of course not. I mean, of course it makes sense to keep accumulating crypto when we're above it, depending on what projects you believe in, depending on, say, like the risk levels, depending on, where you think the market is headed. It just means that the risk levels are higher, okay? So, for instance, if you look at a lot of the projects that we follow on this channel, Bitcoin is currently coming in at around $34,000 to $35,000. Now, yes, in the grand scheme of the market cycle, I think that a $35,000 Bitcoin is still relatively reasonable as to where I think it's ultimately headed, but you cannot take away from the fact that buying it at $3,100 would have been a hell of a lot more reasonable, okay? So it's not that it's not necessarily worth DCAing, it's just that the risk level on it is obviously higher when it's up 10x. Okay, I mean, this is just, this is common sense that when you're looking at something being at 10x, there's going to be a little bit more risk on it, I think. So we look at this and we say, well, if you look at the prior market cycles, there have been 3 major peaks. Okay, we had one in 2011, in the summer of 2011. Let's make sure it's the summer of 2011. It was not the end of the year. By the end of the year, we were basically down in the dumps. Okay, we had another one in 2013 at the end of the year in November. And then we had one in December of 2017 or in January of 2018, depending on if you're talking about Bitcoin or maybe like the altcoin market capitalization or the total cryptocurrency market capitalization. So then the question becomes, well, if you look at this chart, again, this one is well above the green line. This one is slightly above it. This one came right up to it. Where would we expect the next one to go, if history is any indication, and with some dubious extrapolation? Now, again, all models are wrong, some are useful. We know that it's not going to tell us exactly when anything's going to occur, but hopefully it gives us some insight into what is theoretically capable based on diminishing returns, okay? So when we look at this chart and we say, well, could this have been the market cycle peak? And I think it's a fair question to ask. I don't think it's the market cycle peak, based on not only the model, like not only this same model, but also just from a fundamental perspective. We've been adamant that this market cycle is the market cycle of institutions. And we just had a video yesterday with Michael Saylor, and I was asking him, well, if a public company wants to buy Bitcoin, how long does it take? How long does it take for a private company to buy Bitcoin? He said for a public company, it takes like 6 months. For a private one, it takes 3 months. So the idea that every institution can just FOMO into Bitcoin in 2021 is just very likely not going to be the case. It's going to take time, and there's going to be more institutions pouring in 2022. So if the idea is that everything has to go to 100K or 200K in 2021, and that the market's just going to go into like an 85% bear market for the next year and a half after that, then my question would be, well, if the whole narrative is institutional money, then why is that no longer relevant, I should say, once we're in 2022, other than just fulfilling a specific model in terms of, say, like the 4-year cycle and stock to flow and saying that it has to go this way because this is what this model says. Again, I think we all need to be somewhat flexible in exactly where Bitcoin's going to go. I don't want to discount anything from the 4-year cycle theory. Don't want to discount anything from the stock to flow theory. But at the end of the day, no one really knows exactly what's going to happen. And I think maintaining some level of flexibility would be more useful to the space as a whole rather than developing some cult-like mentality that you're either for this model or against it. And if you're against it, then you don't believe in Bitcoin or something like that. Again, we're all on the same team at the end of the day. We all want to see Bitcoin go up, unless you're shorting it. But most of us want to see Bitcoin go up and appreciate with time. And I think that it is going to appreciate with time based on the data, based on historical trends, and based on fundamental reasons that we've discussed. So then we look at this chart and say, well, is there a mathematical way to try to understand where we are in the market cycle? And then we go to this chart. And all this next chart is the percent difference between the total cryptocurrency market capitalization and the fair value logarithmic regression trend line. This is what you get, okay? And if you look at our general downtrend, you might say, well, what does this downtrend represent? I've seen some people look at this downtrend and say, does this mean Bitcoin's going to zero? No, it doesn't. It just means the extension from the fair value is getting less and less over time. This is where we see diminishing returns. Again, some people don't like the idea of diminishing returns. But again, if we were looking at returns that we had seen in these two cycles over here, Bitcoin should already be at $2 million this cycle. And if it's not going to go to $2 million by the end of 2021, then we are seeing diminishing returns against this cycle and this cycle. The main argument, again, becomes, well, it's not diminishing returns based on the prior cycle. And in order to not see diminishing returns based on the prior cycle, then Bitcoin should not go to $300,000. I mean, if it goes to $300,000 this market cycle, then you can say, well, that at least from the last market cycle to this market cycle, you did not see diminishing returns. But even if that played out, you still would have experienced diminishing returns from prior cycles. My thesis is that we will see diminishing returns from all cycles because from a fundamental perspective, it just takes exponentially more volume to move the market cap. I understand that institutions coming in can sort of change the game to some degree. But at the end of the day, I also think, as we said a year ago and 2 years ago, institutional money is needed to push the price of Bitcoin to six figures because of the market capitalization that would imply. So we look at this model and we say, well, if you look at the fair value, if you look at the extension of the total cryptocurrency market capitalization from the fair value logarithmic regression trend line, and you look at these, where we currently are, you note that, hey, we're sort of in no man's land right now. We're not really, at the fair value or in the undervaluation region. We're also not really near the top. Now, again, I don't think we're going to actually hit the green line, because if we did, it would imply that, we're sort of doing the same thing that we did last cycle, but we've seen that it sort of diminishes each time. So with that in mind, I don't think that this, by any stretch of the imagination, is the market cycle peak. However, a lot of people may confuse it for the market cycle peak. What's a way I could envision people confusing it for the market cycle peak? Well, I think someone could confuse it for the market cycle peak if Bitcoin is unable to go to the high price predictions that many other models give by the end of the year. Okay, so there's a lot of people that are fully invested in the idea that Bitcoin's going to go to like $200,000 to $300,000 by the end of the year. And if it doesn't happen, then they may look back at 2021 and just say, well, this was the market cycle peak, and these other models got it wrong. What I'm saying is that what if people assume it's the market cycle peak because we're unable to put in, say, these crazy valuations in 2021, and then everyone expects in 2022 and 2023 people expect it to be somewhat bearish, but then that's when Bitcoin throws the curveball, right? That's when Bitcoin says, to hell with 2022 being a complete bearish year. This is the year we're going to continue moving up, and maybe even into 2023. So I say, when we look at these models, the idea that 2022 has to be bearish, I don't really think is a fair statement. I think we need to see how 2021 plays out. I mean, I would agree that if Bitcoin were to go to these crazy valuations in 2021, then I would be somewhat bearish on Bitcoin in 2022. But I'm still fairly adamant that we're going to spend some time playing in the sandbox for a while before we have any remote chance of putting in new all-time highs. Okay, remember, if you measure, say, the depreciation, or maybe not the depreciation is the right word, but the extension from the fair value from this peak to the intermediate peak is about 1/3, and we talked about that potentially playing out again, and it did. We came right up to the 400% here. Remember, it's shifted by 100%, so the fair value is at 100%. So it was really 300% overvalued from the fair value. And then we look at this and we say, well, what about this region here? In this cycle, we fell back to around 145% overvaluation from the fair value regression trend line. Right now, we are, it was 145%, but remember, it was shifted by 100%. So really, it's only a 45% overvaluation. So what would that look like today? Well, again, if the fair value is coming in at around 748 billion, and you're looking at approximately a 45% overvaluation, I think that comes out to be like I think I wrote it down. Maybe it was at 1.1 trillion or so, give or take, right? Give or take a few $1 billion or something. So it comes out to be approximately 1.1 trillion. Again, this should be 45% overvaluation because the whole chart is shifted by 100%. So where would if 45% overvaluation from the fair value would in fact put the total cryptocurrency market capitalization at a very modest 1.1 trillion. Now, do we have to go back to those levels? Of course not. There's no reason we have to go back to those levels. I'm not claiming that we have to go back to those levels. We're saying it's a possibility. And if we do go back to those levels, we might not even spend very much time there. If you look at what happened in 2013, we went back to those levels, but it was but a glimpse in time. For a moment in time, we went back to those levels. It did not last very long. So we look at this phase and say, well, could we be in a similar phase now? And my contention is yes. And what that means is, at the very least, I think, as I said before, I think we have 3 to 6 months at the very least of consolidation. Does that mean, is anything between, say, 30K and 45K fair game? I think so. 45K is still well below the 20-week SMA. Could we go below 30K? Well, we already have, right? We already went to 29K and slightly below. Could we go to 25K? Yes. Could we go to 20K? It's certainly possible. These are all possible cases. But I think the important thing to take away is that it's somewhat irrelevant, okay? It's somewhat irrelevant whether the bottom ends up being at 28K, at 20K. It's sort of like the people that were waiting for a $9,600 Bitcoin back in October to fill the daily CME gap, and it never happened. And now they look at it and it's like, wouldn't they have just preferred to purchase it at 9,800 rather than waiting for 9,600, which never actually happened? So, I mean, you could look at it as DCAing into Bitcoin, and then if it drops lower, you just go in more. But again, this has to be based on your own risk tolerance, okay? And I can't tell you what that is. I think everyone thinks there's like a one-size-fits-all approach to crypto, and people like to give other people a hard time for selling or for buying. Like if someone sells and the price goes up, sometimes people give that person a hard time. Or if they buy and the price goes down, it's sort of the same thing, right? So remember, everyone comes from a different situation than you. Someone who's 65 and looking to retire might not want to be as risky as someone who's in their early 20s and doesn't really care about what happens in the short term because they're not looking to immediately retire. And if they did lose the money, they have plenty of time to go earn more. So I look at this and I say, well, I think we're going to spend some time playing in the sandbox. We could even spend more time playing in the sandbox than we played in than we were over here. So let's be somewhat flexible. Again, if we start shooting up in 2021, we're going to follow this model. We'll see where we go. Does that mean that we have to stop at this line? No. Does it mean that I'm probably going to be mostly exiting the market? Yes. Because, at that point, I'm happy with the gains. Do I really care if I don't time the top perfectly? No, I don't really care. Will I take profits to improve my life? Yes, I will. Hopefully that gives some insight into sort of how I see things. So continuing on from here, maybe we see something like this. Consolidation for a while. Maybe some brief spikes down, and then we go up later. Maybe we have longer consolidation, and then we go up in 2023. Maybe we do something completely different, okay? But one of the things I've talked about before is this very dubious, sort of like an Arrhenius plot or whatever. I'm taking like the inverse of days and dubiously extrapolating. Should you try this at home? No, you should not. I mean, again, if the last peak in December of 2017 had been off at all by a few months, then it would completely change the projection. But again, if you were to dubiously extrapolate the peak, where would it put it? Well, it would put it in August of 2023. Is that something you should take to the bank? Absolutely not. It could be in August of 2022 for all I know. Okay, I don't know exactly what it's going to be. So we look at this chart and say, well, what are some possibilities? Maybe we come back down and then go back up. Maybe we come down or trend sideways for a while and then go back up. Maybe we come down like this and flirt with the fair value for half a year and then trend up. I still think it's somewhat irrelevant because I think that Bitcoin will generally appreciate with time, and that as long as you're investing in cryptocurrencies that you think will stand the test of time with Bitcoin, then I think what you're doing is probably a good thing. Okay, so we also sort of look at our trend angles, which I should say is dependent on the aspect ratio. Some people like to measure these angles and say, hey, this angle is the same as this one, I'm going to take it to the bank, or there's some trend, I'm going to take it to the bank. Again, it does depend on the aspect ratio, and so it's hard to take too much from trend angles, unless you just say, hey guys, I'm seeing this pattern on these trend angles at this aspect ratio. Is it something that you can take to the bank? Probably not, but at least let's talk about it. In this situation, you can at least see the angles decreasing each time. This is sort of what I'm seeing. So I'm looking at it and saying, okay, I think maybe something like 2013 where we sort of trend up, flirt with it for a while, come back down. But you will note that this here was a lot quicker than this move here. And this is why I think the next move is also going to be longer than the subsequent move that happened after 2013. That's generally what I think about the market, okay? Now, I should say that, we will continue doing this video on the first of every month to really show where Bitcoin is in the entire cryptocurrency asset class in the grand scheme of the market cycle, okay? And I would also like to say that we do have these new T-shirts, the What's a Few Trillion What's a Few Trillion Among Friends T-shirts. You guys can go check those out in the store.inthecryptoverse.com if you are wanting one. Because as I always say when we look at these charts, And we're trying to figure out, can Bitcoin go to 7 trillion to 8 trillion, or not Bitcoin, the entire asset class, can it go to 7 trillion, 8 trillion, 10 trillion, 12 trillion? I think the longer it takes for us to trend up, the higher we will ultimately go. If we do end up going up in 2021 to put in a market cycle peak in 2021, then I would say it's probably not going to make it to $10 trillion, the entire asset class as a whole. If we do it in 2022, maybe it can. 2023, even a better chance of making it to $10 trillion. But I've always maintained, no one knows exactly where it's going to peak before we cool off for a much more extended period of time. And no one knows exactly when it's going to occur. But in terms of where it's going to peak, I've always said $10 trillion plus or minus a few $1 trillion. And as we go to sleep at night, we cannot help but wonder, what's a few $1 trillion among friends? Thank you guys for tuning in. Make sure you subscribe, and I will see you next time. Bye.